Okay, so welcome back to my video. Uh, what we're going to look at in today's class is audit reporting on financial statements. Okay, so the learning objectives for today, first of all, you should be able to explain the different types of audit opinions that can be issued by auditors. So that would include a standard, clean, unqualified opinion, an unqualified opinion with explanatory paragraph, would include except for opinions due to limitations on scope, except for opinions due to accounting disagreements, opinion disclaimers, adverse opinions. Okay, so there are all these different types of opinions. I want you to be able to be confident that you can tell me what type of opinion it is if I present you with an opinion. So that's the first one. And then the second thing is that you should be able to identify and explain what type of opinion should be issued in any given set of circumstances. So if I present a case to you, you should be able to tell me what opinion you think the auditor should issue. Okay, so let's look at the seminar outline for today's class. The learning objectives I've just gone through. In terms of the reading, you should obviously read this seminar outline, which contains the class questions. Please note that question 3, which covers the Baptist Foundation of Arizona case, there will be a pop quiz about that case in the class. Okay, so just to make sure that you've done the reading. So please make sure you've read the material for question 3. In addition, there will be a video about the Baptist Foundation of Arizona fraud. This is not required, or even you don't have to, it's not even recommended reading, but it is optional, right? So if you'd like to view the video, interview some of the characters involved, that video is there for you to watch. There's this video as well, which I'm currently recording. If you want to look at the textbook, the recommended reading is chapter 3 from the Auditing and Insurance Services textbook. And then there's also optional reading here from Auditing Standard 2815. This explains the concept of fair presentation in conformity with generally accepted accounting principles. Okay, again, this is optional. You don't have to do it. So questions to be discussed during the seminar. I've got some audit reports, some real life audit reports that were issued by auditors to US companies in the period before 2017. And I want you to tell me the different types of audit reports and explain the differences in wording between them. Okay, so is it an unqualified report? If it is, does it have an explanatory paragraph, or does it not have an explanatory paragraph? If it's not an unqualified report, is it an except for opinion? If so, is it except for due to an accounting disagreement or due to a limitation on the scope of the audit? Or it could be an opinion disclaimer, or it could be an adverse opinion. Okay, so I've got 5 types of reports here, and I basically want you to read through them and tell me what type of report each one is. Okay, so this is report number 1. It's report number 2, number 3, 4, and 5. Okay, so that's question 1. For question 2, I'm going to present to you 5 different situations. For each situation, I want you to tell me what type of report the auditor should issue and explain your reasons why you think that is the type of report that should be issued. Please note that in some cases it could be argued that there's more than one type of opinion that could be issued, right? So there could be more than one answer in some of these cases, right? So there are 5 situations here. That's question 2. And question 3 is the Baptist Foundation of Arizona fraud. Okay, so there's some information here about that fraud. Remember, there's also a video if you're interested in learning more about this fraud. And the question for this case is, given the facts of the case, what type of opinion do you think Arthur Anderson, that was the auditor, what type of opinion do you think they should have issued? Okay, and that's more complicated than you might expect. That's quite a tough question. Okay, so it will require you to do a bit of thinking on that one. Then there are some multiple choice questions. quite a few multiple choice questions, which will help you to get some practice in determining what type of audit report should be issued for any given set of circumstances. Okay, so first of all, let's begin by thinking about, well, why do auditors issue opinions, and why is this something that we should care about? Why are we even bothering having a seminar on this topic? Well, first of all, audit reports are an essential part of communication, right? It's the only way that the auditor communicates with investors is through the audit report. The auditor does not directly communicate any other information in the financial statements. The financial statements belong to the client, right? So the auditor cannot communicate anything through the financial statements. It's only through the audit report. So this is an essential part of providing assurance. If you think back to the very beginning of the course, where I talked about why do we have audits, what's the benefit of having an audit? Well, the idea is that auditors can provide assurance. So that reduces the information risk for financial statement users. Okay, so that's why they issue opinions. Now, why do we care about the type of opinion that's issued? Well, if the auditor issues the incorrect audit report, then that may result in a penalty for the auditor. Three different types of penalties. One is that the auditor may be sued, right? So there could be litigation. Second one is that the auditor may lose reputation and thus lose clients. So for example, if the audit failure is covered in the newspaper, on the television, if it's mentioned by the PCAOB, right, this can all damage the auditor's reputation. And then third one is professional sanctions, right? So the regulatory agency like the SEC or the PCAOB may impose a fine on the auditor, and there could be also a loss of membership for the auditor from the state CPA associations. Okay, so those are the three ways in which auditors can suffer if they issue the wrong report. So it's very important to understand what type of report auditors should issue. Okay, now the format of an audit report has changed quite dramatically in recent years. Okay, so up to 2017, the format of an unqualified report was quite simple. It had essentially 4 paragraphs, either 3 or 4 paragraphs, depending on whether there was an emphasis of matter. So there was always 3 paragraphs where the first paragraph identified the financial statements audited. So in other words, they'd say ABC company has been audited for the fiscal year 2016, right? So it would identify which company and which year is being audited. The second paragraph would describe the scope of the audit, right? So it would explain how the auditor collected evidence to form an opinion. And then the third paragraph would be the auditor issuing an opinion. Now, if this was a clean, unqualified opinion without any explanatory paragraph, that would be it. It would just be these 3 paragraphs here. Now, there could also be a 4th paragraph if, in addition, there was something that the auditor wanted to emphasize. I'll talk about the different emphases of matter that auditors can disclose in their audit report later on. Okay, but anyway, up to 2017, this was a typical format of an audit report. You'd always get the first 3 paragraphs here, and then this 4th paragraph is also possible. Right? So it's either 3 or 4 paragraphs. So here's an example. This is a report that was issued to Microsoft Corporation for the fiscal year 2017. So you can see the first paragraph here identifies the name of the company. It's Microsoft. The year end, June 30th, 2017. The second paragraph is the scope paragraph, where the auditor says we conducted our audits in accordance with the standards of the PCAOB, blah, 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 blah. This is just all kind of boilerplate writing here. And then the third paragraph would be the opinion. So in this case, the auditor did not give an explanatory paragraph, right? There was no extra paragraph. It was just a 3-paragraph opinion. And this third paragraph, the auditor said that financial statements are fairly presented. So this is a clean, unqualified opinion, okay, from Microsoft. So that was the format of an audit report up to 2017. Now, since then, there have been significant changes in audit report disclosures. Okay. So what happens now is that the auditor will identify the financial statements audited and the opinion. Okay. Then the auditor will describe the basis for the audit opinion, which is very similar to the kind of scope paragraph that we used to have before 2017. And then after that, the auditor will disclose any critical audit matters. These are known as CAMs. So what's a critical audit matter? Well, it's a matter that has to be communicated by the auditor to the audit committee. And there are two types of CAMs. The first one are matters that are material to the financial statements. Okay, so for example, if the bad debt provision is material to the financial statements, and if there was, you know, a lot of judgment involved in assessing that account, then that would be something that the auditor should communicate to the audit committee. So this now has to also be disclosed in the audit report as a critical audit matter. The second one is matters involving especially challenging or subjective or complex judgments. Okay, so for example, if the company has some financial asset that's difficult to value, then it might be very complex, might be difficult to value. Then that again is something that the auditor would communicate to the audit committee, but now the auditor also has to disclose it as a critical audit matter in the audit report. So let's go back to the case of Microsoft and have a look at the type of report that Microsoft received recently. So the first part is where the auditor gives the opinion on the financial statements. Okay, so the auditor says here the company's name is Microsoft. The fiscal year end is June 30th, 2019. Okay, so they've audited the financial statements. This paragraph here says that the auditors also audited the company's internal controls because Microsoft is an accelerated filer. So we have this paragraph there as well. Then the next section is the basis for opinion. Right? So the auditor says the financial statements are the responsibility of management. The auditor's responsibility is to express an opinion on the financial statements. And then here the auditor says we conducted our audit in accordance with the standards of the PCAOB. So that's the basis for opinion paragraph. And then the next part is where the auditor discloses critical audit matters. Okay. So what are the critical audit matters? Well, here's the first one. There's a revenue recognition issue. So it says the company recognizes revenue upon transfer of control of promised products or services to customers in an amount that reflects the consideration the company expects to receive in exchange for those products or services. And then it describes why there's significant judgment in revenue recognition. Okay. So that's describing why there was a critical audit matter. And then after that, the auditor explains how that critical audit matter was addressed during the audit. Okay, so this is a description of the tests that the auditor carried out on the company's revenue recognition policy. So that was the first critical matter for Microsoft. There's a second one here relating to uncertain tax positions. So again, the auditor first describes what the critical audit matter is, right? That there's uncertainty regarding the company's tax position because there's some issues that need to be resolved with the Internal Revenue Service. And then the next part, the auditor says how this critical audit matter was addressed. Okay. And then at the bottom, you have the name of the audit firm, the office, and the date. Something else that's been added to the audit report, which we didn't have before 2017, is information on how long the auditor has served as the company's auditor. Okay, so previously we didn't know that Deloitte was Microsoft auditor since 1983, right? And that information wasn't easy to identify, but now we have this disclosed. So investors can see how long the auditor has been working for the client. Okay, so that's what the audit report looks like nowadays, right? That's the new format with critical audit matters. Okay, what I'm going to do now is talk to you about the different types of audit opinions. So you should remember the first learning objective for today's class is that you should be able to identify what the different types of opinions are. And then the second learning objective is that you should be able to tell me what type of opinion should be issued in any given set of circumstances. Okay, so first of all, let me run through the different types of opinions. So the first type of opinion is an unqualified opinion. So this is where the auditor says the financial statements are fairly presented and there's no additional emphasis of matter that needs to be disclosed. Okay. The second type is an unqualified opinion with an emphasis of matter paragraph. So this is where the auditor wants to emphasize or to highlight something that is already disclosed by the company in the notes to the financial statements. So often this emphasis of matter will concern some fundamental uncertainty. This fundamental uncertainty is most often about the company's going concern status. As you can imagine at the moment with the COVID pandemic, there are lots of companies receiving these going concern emphases of matter because there's significant uncertainty about whether they will be able to continue trading for the foreseeable future. Okay, so this is quite a common type of emphasis of matter, and even more so since the COVID pandemic. But there are other types of fundamental uncertainties that auditors can disclose. So for example, if the company is involved in a large court case, then there's uncertainty over the outcome of that court case. So the auditor may disclose that. There may also be uncertainty about the valuation of certain assets. So for example, if the company has some inventory and the auditor is unsure whether the inventory can be sold and how much it can be sold for, then if that's fundamental, the auditor may choose to disclose that as an emphasis of matter in the audit report. So notice these are not cases in which the auditor is saying there's some problem with the financial reporting. Instead, the auditor is simply saying there's some uncertainty with the company's financial statements. Okay. Now, there are other emphases of matter that can be disclosed. Those would include a change in accounting policy, right? So if the company changes its policy for inventory, for example, then that can be disclosed. Or if there's a significant change in the client's business, right? For example, if the client is acquired by another company after the year end, right? Or if the company completely changes the line of business that it's operating in, right? That's something that the auditor may choose to bring to the attention of financial statement users by disclosing it as an emphasis of matter paragraph. Okay, so that's the second type of report. A third type of report is known as an except for opinion. This is also sometimes known as a qualified opinion. I tend to avoid the use of qualified because it can be a little bit misleading. Some textbooks refer to qualified as strictly except for. Other textbooks would include adverse as a qualified opinion. So I generally avoid using this terminology, and instead I refer to these opinions as except for opinions. Okay, so what's an except for opinion? Well, this is where the auditor says, except for something, the financial statements are fairly presented. So what are the exceptions? Well, there are two exceptions. The first one is where there's a material limitation on the scope of the audit. So in other words, the auditor has not been able to collect all of the evidence that the auditor requires in order to express an opinion on the financial statements. Okay, so that's a material limitation on audit scope. The second type of except for opinion is where there's a material accounting disagreement between the auditor and the client. Okay, so you've got two different types of except for opinions. One is except for limitation on scope. The second one is except for accounting disagreement. Okay, and when you go to question one, I want you to tell me which one is which, right? Sometimes you'll see an except for opinion, but I want you to tell me, is it a limitation on scope or is it an accounting disagreement? The fourth type of opinion is what's called an opinion disclaimer. This is where the auditor actually doesn't give an opinion, right? Instead, the auditor says, I am unable to form an opinion as to whether the financial statements are fairly presented. So this type of report is issued when the auditor believes that there's what's called a pervasive limitation on audit scope. In other words, the limitation on audit scope is so pervasive that the auditor just doesn't have any evidence to be able to form an opinion. Okay, so this is like a more extreme form of the except for opinion where there's a material limitation on audit scope. Okay, so that's the opinion disclaimer. And then the last type of opinion is called an adverse opinion. This is where the auditor says the financial statements are not fairly presented. So this is issued when there's a pervasive accounting disagreement between the auditor and client. So again, this is like a more extreme form of except for opinion where there's a material accounting disagreement. Okay, so if it's pervasive to the entire financial statements, then the auditor will give an adverse opinion. And generally speaking, auditors will judge whether an item is pervasive or not by thinking about, does it affect the bottom line in terms of net income, net assets, total assets, right? If it affects one of those bottom line items in the financial statements, if that's material, then the auditor will generally conclude that this is pervasive, right? If, on the other hand, there's a disagreement, say, about inventory, but inventory is not material to total assets or net assets, then this would be most likely to be an except for opinion, right, rather than a disclaimer or adverse opinion. So pervasive means material to the financial statements as a whole. Generally, we judge that by thinking about the bottom line effect on net income, net assets. That's how we determine whether something is pervasive or not. Okay, so question number 1 is asking you to identify the different types of audit reports. So I've just gone through the 5 different types on that slide. So I want you to look through the different types of reports and identify which one is which, and then tell me about the differences in wording between the reports. Right? How do you know what type of report it is, and what are the differences in wording? Right? So for example, how does the audit scope paragraph differ when there's a limitation on scope versus when there isn't a limitation on scope? Okay, so that's where we'll start the class on question number 1. Thank you for watching.